going to go over a couple things that I do and how I start my day. My trading, especially the open, I have quite a few people asking what do I go by at the open, because I'm so active then, how I pick the trades, how I pick the entries and the exits. And so I hope I will be helpful to some of you, share some clarity. If you have any questions, go ahead and don't hesitate to ask. I'm going to try to make this not too long, about 20-30 minutes tops. So it's still 6 now. So here you go. As everyone in the room know, the number one thing that I looked at the open is at TurboScan. And again, yeah, I'm not trying to sell anything here. I'm not going to try to sell anything in the first 5 minutes, halfway through it, or at the end. I'm just sharing what I do and I look at when I trade, okay? And there are ways to be able to replicate the things I look for and how I look. And I just feel comfortable. And for who else doesn't know me, I've been trading for about 24 now. I really don't remember, 24, 25 years. And full-time for 24, 25 years. And throughout this whole time, I found different strategies and setups I like to trade. So when there are slow times in some of them, I get more active in others. So I'm always busy. One thing that I like to do, and I can say is the bread and butter of my trading, is the open. I start around, and at the open I mean at 9:30, the first 15, 20 minutes, because there's a lot of imbalances on the buy and sell side, and I try to be active and to profit into those overextended moves based on those balances. Okay, so I start early. Pre-market, I'm normally here around 6:30 a.m. Reading the news and seeing if anything's moving. And normally by the time the market opens, I already have 3 or 4 trades in. So it's funny because I can hear myself talking. Anything to do about that, Ricky? I have my feedback here. I can hear myself. Oh, okay. Okay, yeah, that should take care of it. So I still can hear it, but that's all right. So the open, the first thing I'm always looking on, and again, you can use trade ideas. Your trading platform probably has something that would be similar, but I'm looking for anything that is getting overextended, is moving too much, too fast. For example, today we had actually, I'm going to go back to yesterday because there are quite a few people that are asking yesterday about it. That's the reason that I figure I'm going to talk about this today. Yes, I owe yesterday, right? So it has some news pre-market. I think it was earnings. I don't remember anymore. But the point is, was trading around 23, and that's one thing I always look in pre-market as well. I'm looking for a range that is trading, and then if it's breaking out, take it long right at the open, or if it's breaking out, take the short, right? Here, as is ESIO, I did not take the short because by the time I saw was already coming down. Okay, it's hard to look at everything. That's why I have a scanner that go and retrieves all these moves, and I see what's going on and I trade based on that. If you don't have anything like that you can either trade ideas, and I think there's another one, it's called MedScan. You can just look pre-market. I'm always putting the stocks are gapping up and down, and you can take the top 10 on gapping up, top 10 gapping down, and out of this 10 you might be able to get 2 or 3 that are making a range, and then you just watch the open. Once that range is broken, you take direction the trend. In this case, if you're just looking, putting our screens 4 charts, and one of them would have been ESIO, you have taken this break and come down, or overstock today. That's one that Goose called pre-market, and was just absolutely was a beautiful trade. On the daily, it was coming down, was breaking, and right there, you see, he called was like 650, and then just gosh, he was probably gonna give 10 points just today from his call this morning. So that's what I look for. So I'm gonna go back and talk about the trades that I actually did today. Um, just two trades. We had a good week, so today I was kind of just relaxing. Mattel had awful warnings, and let me go to 5 minutes. That was after hours when the earnings came out. Straight, it closed around $15, $15.50. Came all the way to under $14 and stayed under 14 the whole pre-market. Talking about if you're watching that consolidation that traded pre-market between 4 a.m. and 9:30, it was in that 14:30 to 13:09. It was that 40-cent range, right? So I was not looking to trade this at the open of the consolidation. But if you look here, if you're just looking for 3, 4, 5 stocks that are doing this, if it breaks below this, take the short. Above this, take the long. I am a little bit impatient. I don't like to be just looking at 1, 2 things. I like to have other options, especially the open. I just like to be in and out, in and out. So, and that's the strategy I use in the first 5, 10 minutes of trading. So that's just what I feel comfortable with. And I was surprised that it is. I thought I was going to come to a G2C and then retrace. And this is daily chart here on the bottom. So once my first short was around here and then went against, and then I was like trying to figure out the next best area. And the reason that I didn't stop here when it broke, this area is just, I was very, very surprised I actually held. And sometimes more times than not we're going to be right, but sometimes we're going to be wrong. And when we're wrong, I either take the stop right away. And again, this is actually very important. When I took this trade, I was very clear that I was starting with a quarter size. And I guess I need to back up here a little bit. When I just read something, when looks good swing. Yes, I agree, Miles. So I was very clear. Again, I need to go back a little bit. When I take my trades, I never go with a full size. It's very, very rare for me to go full size any start of the trade. So the way I do is I break my account in 10 parts. So I take 10% and allocate that 10% for each trade. And I'm talking about, I don't use margin really much. So I'm talking about cash. But so the 10%, I break down in quarters, so or thirds sometimes. But every time I take a trade, I am already giving room. I'm not assuming that I'm going to be right from the beginning. So I give some room to be able to add in case I'm wrong. Worst case scenario, I can work my way into an average if I'm wrong. And if I see that's really strong, then I just stop out, like I did with what was yesterday. I don't remember anymore, but there was one that I traded twice the day before yesterday. I traded twice and got stopped out. And I was done with it. But on this case, that relative strength, it was strong, but compared to the numbers that I saw, it didn't make a lot of sense to me. So that's why I chose to stick with this trade. I added here, and then I said I will add around 1670, right? So it brought my average to 1620s. So it came down, and from that point on, I was in maintenance mode for this trade. I was just waiting to come down and work my average down, and now it's coming, and I already got out some 60 for a small loss, about 38, 35, 40-cent loss, and I'm bidding on 1620 to get out even the rest. So, and the other trade was PRKS. I'm still in. I'm keeping an eye on it. See right there, I still have a small position and my average 25.14. But I already got out pretty much this last quarter of the position. So so I'm going to go ahead and put this up in the chart. And I want to make very clear, this BRKS, my first entry, I took a loss on it, okay? It was the same way, it was holding around this level, and, oh, hold on a second. Yeah, it was around this level, we had a bit of a profit, and then, no, what's this, my entry right here, and then I didn't want to take the profit into the view up. I held into it. I stopped out 3/4 around this level, held some, then bought back once it went over this area, and then bought again. I added once it broke out this level. So with that, I want to to talk about a very important point. And I'm sorry, it sometimes feels like I'm talking about A, then I go to Z, and then I go back to B, but that's the way my brain works. So just please bear with me. We, I talk to everybody and relate to trading, my friends that trade, and one thing that I see in the room, and I see with a lot, even traders that people have been doing this for a long time, it's the unwillingness to accept that we have to use stops, that we're gonna be stopped, that we are going to I know what to put you on mute, and now I don't hear my feedback. Can you all hear me still? No, I didn't think about that. Quick test. Can you guys hear me? Okay. All right. Thank you, Jay Will. So it's the unwillingness to accept that there will be losses. So you always have to remember, and if I'm repeating myself because I already talked about this in the room earlier, I was watching a game this weekend. Okay, I have two boys and we like to watch soccer, and we fly everywhere to watch Barcelona or Real Madrid play. Okay, and it was an old game from Barcelona where in the first 20 minutes was losing a game by 2, right? And and I like to see human behavior because everything translates to trading. I mean, trade everything that you can. That's the beauty of it. I mean, it's if you're happy, if you're angry, how to respond. Sometimes you take things personally. Um, the sad thing about trading is like we take a lot of ego and we take things personally, and that's one point that we all need to realize that we are going to be wrong, one, and two, the market's not there to go against us, to take on us. It's just a fact. I mean, there will be losses, right? And until you realize that and accept, you're gonna have a really hard time making through trading. And I'm talking about this because I forgot to. And I'm talking about this because BRKS was a perfect example. There are some people that took the trade and took the loss, and because they took the loss, they did not put that finger into the the hot stove or wherever because they thought, oh no, I'm going to get burned again. You have to realize if you have a strategy, like I just mentioned, I've been trading 20 plus years, and all this time I have this, and sincerely I don't know how many, probably 7 8 strategies that I use consistently, but I'm going to be wrong a lot of times. Sometimes I'm going to be wrong every single time that I take them during the day, but you don't have to define yourself as a trader. You're trading or strategies based on one day. You're going to be miserable because if something works, you're going to be exhilarated because, oh, it's great, everything is awesome. If it doesn't work out, you're going to be horrible. Then 5 minutes later, it works, and you're going to be feeling great again. You have to detach yourself, okay? don't take personally. BRKS in the first entry didn't work out. Okay. And I was the first one to tell you guys, well, I took the loss. I took the loss here. That it was like 80-cent loss. But then when I saw it set up again, I got backing. And then work. It could maybe wouldn't have worked, but that's not the point. The point is you have to have that process that you have to follow every single time in every single trade. If you start to be choosy when to do and not to do, it's because you tried one time, didn't work out. You're not going to make on trading. It doesn't work that way. All right. With that, another point is position sizing. Talked to someone yesterday. He was like, "Oh," he was telling me about all his trades. He took like 3 or 4 trades. Then he comes and tells. I ask him, "Okay, how come in one trade you made X and the other one you lost more than you made in the one you made?" He was like, "Well, because the one I took, I took the profit. I wasn't so sure about it, so I went small, and the other one I went regular size." If there's a trade that you're not sure about it, you shouldn't be taking any size to start with. You should not be taking the trade because there's no point to. If you don't like it, you pass. Because otherwise, if you take that trade, you're going to be missing opportunity to take another one that may present, but it's taking your attention because you're spending time with the worthless one, right? And you take 2 trades with same size, and the one that you make money, at least 1-to-1 or 2-to-1, whatever you like to trade. If it's 1-to-1, worst case scenario, you break even. 2-to-1, you make half over what you lost on the other, so you're ahead on that trade. But if you were choosy on every single trade, you go with a zigzag as far as size based on the stock price, or how much you like the trade or not. You always see, in the end of the day, you're going to lose money. You have to be consistent. Every single trade that I take is based on a dollar amount. If it's a $300 stock or if it's $1 stock, as long as there is volume, because sometimes, of course, if the stock trades 50,000 shares a minute, and I'm trying to get 100 to 100,000 position, it'll be impossible, and impossible to enter. I can get fine, I can work my way into that. But the problem, if I try to get out, I'm going to be shooting myself on the foot. So as long as you have the volume, and I think most of us, here don't trade that much size, it needs to be your religion to enter every single trade with same size, as far as dollar amount invested into it. Whatever the size of your account, I already mentioned. My account, I split by 10, and each trade takes 10% of it, and that's breaking down in thirds or quarters. I don't go all in with 10% of the account in a given trade, unless it's something that I really, really like and it's crazy stupid. Then yes, otherwise I don't. Okay, so for whoever doesn't know, what I have up here is I have trading news. I use Newswatch. Then I put the BRKS here just to make sure that. And by the way, the BRKS, my stop is, you see this consolidation area right here, bing, 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 bing. If it breaks, it's 2650. More than likely, it's going to come 2575, right? So if it breaks 2640 or just under 2650, I'm going to stop the last piece that I have. My average is 2514. So you'll see, I already got out, and again, I already got out 3/4 of that position. It didn't start well because I did stop, but I did exactly the same thing on the second entry as I did the reason on the first entry. And the second worked, and the second one already made up because I lost 80 cents, and on this trade I already took some for $1.50. So, and now I have $1.70 or so. So I had $2 on it. that I already got out some there. So I lose 80, but I have $2 on it. So um, you have to be consistent with what you do. You can get hurt. You can say, "Oh, this is a bad day." we, the day just started. By the time I took the loss on that trade was at 10 o'clock, 10:30 this morning. We still had what, 5 hours ahead. So you can't let one trade define how great or horrible your day is going to be. If you end the day red, I have red days. Everybody have red days. Thank God they're not often, but they happen. Um, and so what? It was just, next day, as long as you were true to your stops and you respect them, next day you just come and do everything the same. As long as your strategy, you make better trades, you make more money than you lose, you're fine. So that's why I like to do at the open. And if I talk about everything that I do as far as all strategies, we're gonna be here the whole night and a day. I just want to talk about another one quick strategy that I do, and this is for like small swings, um, and works really well. It's one of the most successful ones that I do, and I've been doing for a long, long time. Okay, sometimes I share with the room, but I don't like to. I share when there's a lot of volume, but when there isn't, I can just keep to myself because if everybody that knows me, you know that I absolutely despise pumping and front running and anything like that. And a lot of times when I take these trades, because it's just like the right setup, is just the thing, it just snaps, and there's no point to uh, to post something that you already got away from us. But it's something that each one of you can do at home, and it's really sweet. It takes 10 minutes every night, and I it helps a lot. You may get 1 or 2 plays per week out of this. Sometimes you go there and there's nothing, but sometimes you have that really little bitty of a jam that it turns out to be really good. So actually, that's funny. And so let me go ahead and go ahead in advance say I know a lot of you uh, been trading for a long time. I know there's some people in the room that use shortcut as in market making, in desks. So you very advanced. Um, Probably this might sound idiotic to you, too simple, but that's one of the craziest things. That's I've learned in trading. The most obvious and simple things are the ones that really work. When you really try to complicate and do some really crazy, trying to find that pot of gold at the end of the rainbow, um, you go crazy because it doesn't have to be complicated. When you comes down to trading, it's all about human psychology, right? And fear and greed, and that's what moves everything. And we're pretty simple minded animals, so we're not that complex. I like to think we are, but really not. We're just driven by very basic instincts, and that translates into to move the stocks and what happens as far as price in a stock. So I'm sorry if I'm mumbling here, but so here you go. Um, and what I was saying, I just noticed right here on BRKS, that's one perfect example of what I'm going to talk about, right? You see right here, this is daily chart, and the blue line is the 50 moving average, simple, and the yellow is a 20 moving average, right? And that's one thing that I look. That's one of the setups that I look. Okay, and that I wanted to share because my kids, they actually do this and they find place. And we talk about 13, 15-year-olds, and they write down and they paper trade. They have their own trading accounts already. They paper trade and they tell me, and it's beautiful. So I hope some of you start to look into it because it's really it's really neat. So pretty much when they cross on the daily, we just start, you watch, especially in this area right here, see a little consolidation. When they cross, break the consolidation, take the long, and you stop under the consolidation. And the profit, normally, I look, and the reason I'm looking to this, I don't know, I shared in the room a while ago about Deckmar. Uh, Excuse me, Deckmar, Demark. Do you guys have that link? Some of you have that link. Can you share, please? Uh, on YouTube. So what we do, we count the range before the break, and I take a profit 3 times the range before the break. So in this case, on BRKS, talk about the devil. See right here, it was 25.50 to 24.38, right? So that was the range. So it crossed. Once it broke, I'm looking for 3 points on the breakout. So the breakout was 25.50 and went to, yeah, went to 29. And eventually, of course, it went. But that's the target I look for, especially since it was matching this last high, which hit here, and then retraced. Of course, the retrace was minimal compared to the move, the subsequent move. But guys, if anybody has that Demark link, can you please post? And if not, I will find and I put there at the end. But that's pretty much it. I mean, you can watch the whole thing, or you can just take my word for it. You get the cross, you look at the range that it's making, then the exit will be 3 times that range. Okay, and it takes a week, sometimes two. I talk about, in this case, 25 to 29. That's 10, 15% on the move in a week on the money that you have invested in it. So the way I do it, I don't know if you guys have scanners or any ways to do it. So the way I do it, I just go to this website right here. Whoa, let me to do that. I'm going to put the link. Right there. And it's free, so y'all can use. And what I do, I just go and I click. And again, those lines is 20 and 50, right? So you just click. You have the cross above and cross below. You have a list. And what I do, I copy and paste this list into a Excel spreadsheet. And this is very important, okay? Okay, thank you, Turf. Thank you. So I copy and paste this into a Excel spreadsheet. And what I do, I take anything that trades less than 700,000 shares a day, okay? So BGT will be out, Bio will be out, CPTA will be out. And again, I do this at night. If you do now, you're going to be missing some volume throughout the day, right? So make sure that you do this at night, or if you do it in a day, throw back, I don't know, maybe 500,000 shares, because by the time the market closes, you have the 700,000. 700,000 is like the sweet number, because you want to have some liquidity. You don't want something that, when you have less liquidity, you're going to have a larger spread, right? Normally. So you want something that you can just get in and have a true move, not just something collapsing, because there's no point something coming down or going up 1 point, 2 points, but you have a dollar spread and you have to be sitting waiting to get filled on your ask to sell, right? And the best bid is 1 point below. So you want to have liquidity. So over 700,000 shares, you copy and paste this into a Excel spreadsheet, take anything on 700,000, and then I copy and paste into my minders that I use for on my trading platform. And just a second, take a look at this BRKS here. And I just click one by one, and as I click, they go and load into the chart. So the whole process takes, to look at 30 stocks, it really takes about 10 minutes most to do everything. So let's take a quick look here. Just on the list as it is right now, AON. Okay, so we'll be looking. So okay, AON, look, when it crossed here, came down, and this is very important too. Okay, there are little nuances that are very important. You should be paying attention. The price, which the candle, need to be as close as possible to the to the candles. So on this case, AON was 143 and the cross was 145. So that's too far away. So I like to leave like less than 1% distance. So the perfect setups are like this. BRKS, see, it's crossing, it crossed, and the price is right in the cross. That's why I said you're not going to have 10 of these per day. You might have 1 or 2 per week. But when you have them, they're very, very, very consistent as far as, um, getting your move. And a lot of times people say, why the 20 and the 50? But I don't know. That's why I looked at all of them. I looked at the 70. I even used Fibonacci comparable lines, 161 for a moving average, to see if it had something that we have a better result. And the ones I like the most are 20 and 50s. 20 is because it's close to the price. Once it's breaking 20, it's breaking a trend, right? And the 50 is 50. Everybody looks, these two lines. They're the most powerful besides the 200. Talk about daily, right? Of course, if it's intraday, one of the most important lines to me is the view up line. So here we go. So AON was far away. I'm just going in order here, right? Which is on that list. Going over on daily. ATOS, well, that's too cheap. I don't trade that one. And by the way, too, you need to see the prices that you like to trade, right? ATOS is too cheap. I normally don't trade this, but look, it's less than 1%, crossed, and then moved up. When it crossed here, was already too far away, more than that, so would have passed. Let's just take a look. Look at this. Oh, wait a minute. No, the cross was already passed, but it came down. Yeah, by 2 days late. So this would have worked, but I'll take another one. AVEO. Was too far away, so it was a no-go, but now it's crossing and it's close. Let's say 292, 302. So if it comes down to around 296, maybe, but normally I don't trade this because of the price, but look at right here when it crossed, right? Crossed, held the price, it broke. Of course, once it broke, this consolidation was already gone. So if you're watching and you have this, right? It crossed, you see this consolidation. When this breaks, you're gonna have a move. Of course, you're not gonna have a move like this every time, but for example, like this, look at this little break here, right? Once it broke this consolidation, 71 to 98, that's, it's a 30% move. See right here, you got the cross. Of course, it crossed, it held. So you look at this consolidation. So once it broke, you take it long here, right? Wasn't the other day the one missed Trivago, right? You guys remember in the room? Pretty much the same. There you go, right there. That's how I found it. And I don't know why I didn't take it. I was so mind blowing with myself. I was like, why did I not take this one? But it was the same concept. And you guys remember this in the room, right? The buy was off this consolidation here, 830. Oh, I know. I remember now. I missed. It was at the open or something. I missed this break and I didn't want to chase. So I was waiting to come back in the same day or next day. And 1 second, let me see. Okay. I'm sorry, I just got a text. So it crossed. I was waiting to buy off this consolidation. Of course, you can buy some around this level, but I like to buy off the breakout, right? And yes, what happened here, I didn't want to chase. My plan was to wait to come back to 830s and take the long. I didn't get my entry the next day and went from that $8, which should have been the original entry, all the way to $10. So that's, talk about the day. So I really like this type of setups. And there's this cross here, but it's too far out. And look at this other one. Another example right here. See? Came in, touched, he broke, and went. So, and that's how I found this stock. Just, sitting down here and going over um, that list. So it's very simple, and but it's effective. So that's what you want, right? It doesn't have to be something extraordinary or crazy that you need to have a PhD to find out. Another one was in that list, QNST. And there are stocks. I have a list of stocks I normally follow. And with time, you start to save them into your reminders. And every day you just go there and think, click, and take a look if they're getting close. And if they are, you just put it in a separate chart and you put some alerts. And when they happen, they trigger, just go and take it. Some of these stocks, they're like, they do that consistently. And of course, it will be like two, three, maybe four times a year. But when you have a list of, remember, there's over 8,000 stocks out there, right? So if you have a good list of 20, 30 of them that will be doing two, three times a year, you're going to have two, three a month that will be happening, right? So, and this is the one crossing below. And again, it's pretty much the same criteria going up or down. Let's just pick one here, CLX. Let's see, CLX. Look at CLX. Right? Crossed. Look at it. You don't even have to look at the hiking Ashi or anything that I look over there. Just simple, basic. Look at the price when it hits CLX. Right? Take the short. When you have that cross, the price was right there. And of course, in this case, and I just picked from this list, was right here. I just picked one. There's nothing. I'm going to get another one in a minute here. But when cross here was already too far away, wouldn't have taken. Here was far away, wouldn't have taken. But you're going to have this time. There you go, right here. See? He crossed. Plenty of time to take this trade. See right here how it stayed? And then once it broke this consolidation, 132 to 127. Talk about 2 days, 3 days once he broke that level, right? I think the EXPR that I took at the end of the year was kind of based on that. Now EXPR was a different strategy. But look, it wasn't based on that, but look at that. We took the short at 10. You guys remember that, right? Covered at the low nines, then entered again. I think I was 950, and then we got out at high eights. In hindsight, I should still I should be in this thing this whole time. But that's another strategy, and we go over that another day. And it's unbelievable. I said 20, 30 minutes, and look, I mean 40 minutes already. Okay. Anybody? Any questions? BRKS, let me just go here really fast, show what I'm doing. You see this low range that is making right here. If it breaks that 2650, like I said, I'm out. But look how nice it's trending now. It's slow. I like this beautiful waves that it's making. RSI still shows overbought. I have really liked if it came down RSI came and I was crossing, but it's looking fine here. If you get some volume of 2745, you're probably going to get 2770. So okay, anybody have any questions? And I will be waiting because I know there's a delay. And by the way, while I wait for someone to reply, if there's anything you want to know, okay, so let me see. So just to get to 2050 cross, right? Just look across and if it's closing, consolidate a bit, takes a trade on the mode cross. Right, Sanjay. Yeah, that's right. And of course, the 50, if the 50 is below, let me put over here. And I reply to 18 in a minute about MAT. Okay, Mattel, I think is important to talk about that one. Um, in an uptrend, you want to have the slowest moving average on the bottom. So in this case, you want the 50 to be under, to be showing an uptrend, and vice versa. When the 50 is above the 20, that's bearish, right? So no, not long, Ryan. I showed an example of long and short that I took, and the CLX would have been a short, right? But always remember, for the long, the 50 needs to be under 20. And to be short, the 50 needs to be above the 20. Okay? AT is asking why I'm not holding Mattel for a swing. The thing with Mattel, and I saw this morning after I was already in it, Vanguard filed a 13G for 24 million shares. So something doesn't seem right on this trade based on the numbers, on the earnings that they had. Um, I would not be surprised if there is a buyout coming at some point on this, because it really does not make sense. Mattel had a terrible quarter during holiday season. That's when which other time of the year they're gonna be doing their best sales, and they blew right there. So I really don't get it. So what I am thinking is there must be something in the works there. Um, and there's no way I'm going to be fighting it. So I take my 40-cent loss on it and move on. So sometimes it's like I said, doesn't have to make sense because a lot of things we don't know that uh, that could be in works in the back, and some people have a hunch, like Juno before the buyout, somebody bought 5,000 shares in calls, and immediately after the buyout was announced, which was the very next morning, those $5,000 were worth $500,000, right? Sometimes people just get lucky, I guess. Um, but that's not my case. I have to go by what I see in the chart, and I cannot fight when there's something that doesn't seem right. Let's see another questions. To be long, price above 50 and short below the 50. Not the price, Sanjay. Uh, what defines an uptrend here is the 50 moving average. This is all simple, okay? It needs to be below the 20. You see right here? Let me blow this up. You see the 50 is the light blue, right? So it stays under the 20. And the sign of the change of the trend, of course, in this case, was far away. But let's say here, see right here, the 50 was on top, the trend was down, right? You had that pop, but overall was down, right? Then once crossed, there was this shift in the trend. I'm not saying that you buy right away, or let me rephrase, I'm not saying that I buy right away once it crosses. I like to see something like this, the consolidation, because based on this consolidation, I like to decide. That's what gives me the insight of how much I'll be looking as far as the target. And when I have a consolidation like this, my target's always 3 times whatever the consolidation was. Okay. Now, if it just breaks out, then I have to look for the last area of support resistance, like Trivago, right? And these lines that I have here running, they're linear regression lines and going back 300 periods. So going back 300 candles, right? So, but that Trivago, look at here. The breakout was here. And again, Trivago was not in the trade. I kind of blew on that one because once it broke out, I was just a spectator. I remember vividly in the room, we were waiting to come back to take the trade, and the target would have been around this level right here, which was 1045. It came to 10 and came in. So by the time I probably have stopped right here on top of that the daily line. So, but for sure, if you got to, I don't know, 1030, 1040, I would have turned into a short because of this previous consolidation level, right? When you see something like this that lasted from September for what, a month and a half, it's I'm very confident every time that we're gonna have a reversal. So this would have been the area we have sold and reversed and taking a short. In this case, since it got to $10, actually we took this short. We shorted at 10, right, guys? You all remember that, right? We took the short to 10, and it was like just 20, 30 cents. And that same day it came to like under $9. But yeah, we actually took the short because we missed the long, but we took the short side. It got to $10. Two things. When it got to $10, there was the buying just died. There was a big seller at the end. He got taken, and then there are no more buyers. That was our sign to take in. And I was short at 992. Okay, I remember vividly now. It was 992, and the idea was to start at 992 and add to the position if you got to this level. So we have been, one tier, second tier, and then we stop if it breaks that. But it never got there. So yeah, we didn't make money on the long, but we did take the short. So okay, let me see one more question. You mentioned before you take stocks of the pre-market consolidation for the first 5 minutes. Are you only scalps or are you only focusing stocks with similar gap down? Let me give Adrian. Let me give you an example today. That was not my trade, but there was someone in the room that took this trade, and I was very proud of him because that was Matthias, and we talk about this in the room quite a few times, and I didn't see it, but right here. That was the consolidation pre-market. He took the short, I think was 86. And he wrote, I think, last exit was like 84, 84.50. But I got an alert, overstock. Goose, that overstock short is giving 9 points. Wow, that was really, really amazing. Goose called overstock short was 66.50 pre-market. Yes, 9 points right here. And that was right off that break on the daily. That was absolutely beautiful, beautiful call, Goose. Okay, so I don't see any more questions. So yes, just one last thing talking about the. You find something that is consolidating pre-market. This one actually 88 came down to 87. This was exactly, you can say the consolidation was 89 to 86.50. So it's kind of a little wide, but it still worked based on the gap they had. I mean, it closed at 77, so there's plenty of room. But if you find anything that is gapping $1, $2 for a long period of time pre-market, once it breaks that level, I personally, if something is gapping up significantly, let's say 5 to 10%, 3, 5, 10%, I like to take the other way of the trade as far as on the short side. I trade long and short normally, but I tend to notice that they come down a lot faster on the short side than the way they go up. So that's why I like, at least in the open, that first snap to take the short if that's the case. Okay. This one didn't consolidate. There was no trade. There were no trades pre-market and came down. And if we saw this, we probably would have traded for sure on this move down. So look at the daily, and that's one thing they always have two charts up. So I'm looking on both of them. So when it came down here, let's say you open, came down to 79. I go on the daily, right? I say, okay, where's this thing gonna hold? 79 was this first level right here, or close to 80. Probably have taken along around 80, because remember it's coming down from 85, right? Yeah, but we did not take this trade today. So, but these are the fast ones. Just the first imbalance, people that were held, were holding overnight, people that are getting margin calls, because a lot of these trades, what happen also is someone is, on this case, long, and they have stops or they have margin calls. What happens is, like, they have the pre-market to get over to close the trade on the margin calls. From the moment the market opens at 9:30 and 1 second, is out of their hands. The brokerage firms take over and close their positions. And when they close the position, they don't care what they get out. It's not their money. They just get out. So a lot of times that's why you get this just absurd washes. And that's why you try to, to take the quick trade in and out, and we move on to the next one. Okay. That's it for now. I appreciate all of you coming, and I hope it was clear. Um, and I hope a lot of you can, have whatever I've shared here for good use. Well, it was my pleasure. Thank you very much for your time. I really appreciate. And please come to stocktraders.net. You can stay. We have a free room, free area. And like I said, I'm not selling anything. That's what we do every day. We like to have a community. We all share ideas. A lot of times, I've been trading for over 20 years, but I have ideas from what everybody shares in the room. And there's a fellow who's been trading for 4 months. A couple days ago, he posted something live in the room. I was like, oh, let me take a look, and I made a trade out of it. And of course, we shared, and everything's live in real time. But just come over, and I hope to see you on the other side. Thank you very much for your time, guys. Thank you very much. Bye.